All right. Well, hello, everyone. My name is Heather Jordan. I'm the Vice President of Human Resources here at Principal Solutions Group and Eliason Group. Thank you for joining the 2018 Benefits Open Enrollment webinar. Today, we're going to talk about the benefit plan options, as well as review the highlights of some of the changes that you will see for the upcoming plan year. As you may know from previous email communications, Principal Solutions Group is merging with Eliason Group. So as of January 1st, Principal Solutions Group will take the name of Eliason as well as adopt new benefit packages. Along with this change, there are a few other items I would like to make you aware of. First, our open enrollment, or our benefit plan year rather, will be changing to a January through December plan year rather than a June to June plan year. Open enrollment is now, and this is the time to add, cancel, or to make any needed changes to your benefit selections. Unless you have a qualifying life event, this is the only time that you can make changes to your benefit election. Also, another item to note is that we will be moving to a weekly paycheck cycle as of January 1st. So any benefit deductions will be calculated over the first 4 paychecks in each month, which is 48 checks annually. So please take that into account as you plan your deduction allocations. You will continue to make benefits elections by logging into the ADP self-service portal, the same as you do now. And then once you log in, you will be greeted with an open enrollment wizard that will walk you through the steps. Enrollment participation this year is required even if you do not wish to elect our benefits. So you must log in and either waive benefits or elect benefit options that are available to you. If you are currently enrolled in a Principal Solutions Group medical plan and you do not log in to either elect or to waive your benefits, you will be automatically placed into the lowest cost health plan moving forward for 2018. So please make sure and go into ADP, make sure that you review all of the benefit information and elect or waive the plans that you do wish to be enrolled in or do not wish to be enrolled in. Another item to note is that open enrollment for benefits starts now and it ends on December 11th. So please make sure to log in prior to December 11th to make all of your final elections. I would also like to suggest that during the first few checks that you receive in January, to please verify all of the information for your deductions. We will be merging into a new ADP system. With that, you will need to create new usernames as of January to be able to log in. So we'll send that information to you before the beginning of the new year. But it will be important for you to go ahead and check your check stubs just to make sure that everything looks accurate. So I'd just like to point that out. So those are some of the highlights. Joining me today is Rob from our Wells Fargo Benefits Brokerage. Excuse me, he assists us in determining our plan design market options, and we'll be covering the details of the benefit plans with you today. So with that, I'll hand it off to Rob to go through the benefit options in detail.
Thank you, Heather. Good afternoon, everybody. As Heather said, I've worked closely with the folks at Eliason Group to come up with a strategy for 2018 and put together the benefit package. Heather already mentioned we're changing from an anniversary date of June 1st to January 1st. The good news is that if you're on the plan at PSG, your deductibles used to reset on January 1 anyway, so that will minimize the medical plan impact on employees and members. For 2018, we settled on Blue Cross and Blue Shield as a health insurance carrier. As you might have seen, we're going to offer 3 options within Blue Cross and Blue Shield: the Preferred Blue PPO that comes with an HRA plan, the Basic Saver PPO that comes with HSA eligibility, and the Blue Care Elect Saver plan, which is also HSA eligible. If you're currently participating or thinking about participating, The HSA plans, if you're enrolling in those, you will have the opportunity to direct part of your paycheck on a pre-tax basis to Optum for your HSA. So for those that are participating now, Optum was the preferred option and will be so in 2018. Also being retained is Teladoc, your telemedicine provider. This is a great benefit, free benefit. The company pays for the service and also pays when anyone utilizes it. And this will be available for anyone that enrolls in one of these 3 Blue Cross medical plans. We'll talk more about these later. Blue Cross is also going to be the provider for the 2 dental plan options. iMed will be the provider for the vision coverage. And then we'll talk about some of the flexible spending account options as well towards the end. Before we dive into the actual provisions of the 3 medical plans, I'd like to talk conceptually because these may be new to some people. Though there was an HSA eligible plan available under PSG, we're going to have 2 under the new option, along with 1 that is an HRA plan, which is the Preferred Blue PPO 1500 on the right. If we start with the 2 HSA eligible plans, the Blue Care Lex Saver 4000 and Basic Saver PPO 2700, a lot of their provisions are the same. They're both HSA eligible. They're both on a PPO structure, which means you can go in and out of network. In both plans, you do not have to assign a PCP. There's going to be a deductible that you'll have to meet first before most of the benefit provisions kick in. So almost everything is going to go towards the deductible. The only thing that won't is your essential preventive care. So even prescription drugs, sick visits, all of that is going to go towards the deductible, which we'll highlight on the following page. After you get through your deductible, there will be a co-insurance level where you'll have some cost sharing between you and the plan. The deductible can be paid either out of pocket or, as I mentioned, you have the ability to fund an HSA account to draw, and you can draw from that account to pay towards the deductible. The Preferred Blue PPO 1500 is a little bit different. As I mentioned, it comes with a health reimbursement account. The acronym there is the HRA. It's also a PPO, so you can go in and out of network for that plan. There's no PCP required for that one. There is also the deductible, and everything similar to the other 2 plans will go towards that deductible first, except preventive care. The difference here, the big difference here, is that HRA plan. And the HRA is paid by the company and will help you fund the first half of the deductible. We'll talk about the mechanics and how that works in a couple pages. So provision-wise, these are the 3 plans that you have available again. The plan all the way to the left has the most cost sharing at point of service, so it has the highest deductible. If we look at the in-network benefits, it has a $4,000 deductible for an individual, an $8,000 deductible for a family. Out of network, it's $6,000 and $10,000. I mentioned this is HSA eligible. The out-of-pocket max is $6,450 for an individual and $12,900 for a family. Preventive care is covered at 100%, so you don't owe anything. Your responsibility is 0%. After you get through your deductible, you'll then have a 20% cost sharing up until you reach that out-of-pocket max, and after that, everything would be covered at 100%. Out of network, you would be paying 20% for preventive care, and then deductible followed by 40% co-insurance up to the out-of-pocket max. For the emergency room, you will have to pay the negotiated rate up to the deductible, and after that would be a $150 copay. And prescription drugs are also going towards the deductible first, and then have copays of $10 for generic, $25 for a preferred brand, $45 for non-preferred brand, and then the mail order drugs are below. The generics are $20 for mail, $50 for preferred brand, and $135 for non-preferred brand, and that's for a 90-day supply. So this plan, as you can notice, it doesn't have traditional copays. It's very different, might be very different than plans that you have had, and this is a market trend that we're seeing most organizations move towards. The next plan over, the Basic Saver PPO 2700, works very similarly, except it has a lower deductible amount. The in and out of network deductible for this plan is combined at $2,700 for an individual, $5,400 for a family. It's obviously HSA eligible, and the out-of-pocket max is $6,450 and $12,900. The rest of the plan works exactly the same as the previous plan. So everything goes towards the deductible first outside of preventive care, and then your coinsurance kicks in up to the out-of-pocket max. The plan on the right, which we had mentioned is a little bit different, has an HRA component. It does have a deductible, so the individual deductible is $1,500, the family deductible is $3,000, and the company is paying for your first half of the deductible automatically. So this isn't going to be an account you need to elect. It automatically comes with this plan. And then the out-of-pocket max is $6,450 and $12,900, similar to the other two plans. After you get through the deductible, if you're staying in network, your coverage is going to be 0%, or your liability will be 0%. So everything will be covered at 100%. For the emergency room, you will have to get through the deductible, and then there would be a copay of $150, and the prescription drug copays work exactly the same as the other two plans. The big difference here for this plan is that HRA, which helps you through the first half of your deductible. Two features that come with the Blue Cross and Blue Shield plans. The first that I mentioned is the My Blue member app. I strongly recommend, once you get your ID card and you're enrolled, is to download this app. It can help you review benefit coverage. It can help you look at claims you might have. It can help you find a doctor in a pinch. A very useful tool to have. The second feature is the fitness reimbursement. It pays up to $150 for a year. So if you have proof that you've belonged to a fitness club for over 10 months, at the end of the plan year, you can fill out a form from Blue Cross's Member Central to submit to get $150 reimbursement. We mentioned Teladoc, and for folks that are enrolled in PSG benefits today, this should look familiar, but we'd like to remind everybody that this is a strong benefit and can be very useful, particularly in the plan environment that we're going to have in 2018. Again, this is provided by the company, paid for by the company. This is for anyone that enrolls in one of our 3 Blue Cross medical plans. You can access a doctor anywhere, anytime. He can help with many conditions such as sinus problems, bronchitis, allergies, and the list goes on. They can even call in prescriptions for things like strep throat, and you can do everything from the comfort of your home or your office and get on with your schedule. Look for more information coming out in member packets going to people that enroll in the Blue Cross plans. Moving on to the health savings accounts. So again, if you elect one of those first 2 plans, the Blue Care Elect Saver 4000 or the Basic Saver PPO 2700, you'll be eligible to participate in a health savings account for 2018. These are used for qualified expenses, your traditional medical care expenses. The biggest one that folks would have would be the deductibles, coinsurance. It even covers things that the vision or dental plan might not cover, or your responsibility. It can cover prescription drugs and other things that might not even be covered within the plan. Some of the features of the HSA is that it's a pre-tax plan. So the biggest benefit is you can set aside money out of your paycheck, lowering your taxable income to pay for qualified medical expenses. The cool feature here is that the money is always yours. So if you're familiar with the flexible spending account model, where you don't use it, it goes away, this is the exact opposite. As soon as the money is in your HSA account, it's yours forever. Even if you change jobs or change plans, this money is yours, rolls over year without penalty. There are IRS limitations to how much you can set aside. For 2018, those limits are $3,450 for an individual, $6,900 for a family, and if you're age 55 or older, there is a $1,000 catch-up contribution. You're empowered to do almost anything with this account. You decide how much you want to contribute. You decide when and what you want to use it to pay for, provided that they're qualified expenses. You can even choose which bank to administer it. So we've chosen to continue a relationship with Optum and feed payroll deductions, but you can choose a bank HSA of your choice if you so choose. If you amass up to a minimum or over a minimum of $2,000 within your HSA, you have the option to invest in mutual funds to create growth within your HSA plan. You will be assessed $2.75 monthly. This is the administration fee for the account, and it will come directly out of your funds. The health reimbursement account is pretty different. So this one comes with the $1,500 deductible plan, the preferred blue PPO. It's automatic. You don't have to elect it. You don't have to elect amounts. And again, it's paid for by the company. And it'll help you get through and specifically pays for the first half of your plan's deductible. And that amounts to $750 for an individual and $1,500 for two-person or for family coverage. In terms of functionality, if you go to the doctor in 2018 and it's not preventive, it's something that you owe responsibility for, your doctor will then bill Blue Cross and Blue Shield. Blue Cross will then adjudicate the claim and send information to the doctor and then also to HRC Total Solutions, who is administering the account. HRC will then process the claim accordingly. It sent a check directly to the provider or hospital based on how much is owed. The hospital or doctor will receive the money with an explanation of where it should be applied and for what date of service. If you're going to a non-network provider, so someone that doesn't take Blue Cross and Blue Shield, you'll likely be in receipt of the HRA money directly from HRC, and then would have to pay the provider for your services. A debit card will be provided to access the HRA balance for prescriptions. The third spending account is a healthcare FSA. So this is the traditional plan where you can take pre-tax contributions to an IRS maximum of $2,650 for qualified expenses. This is the one where if you don't use the money, by the end of the year, it will be lost. And it's very important to note that if you're enrolled in the Blue Cross PPO, and this is the HRA plan, the HRA will pay the first half of the deductible, and FSA funds must only be used for the second half. This plan is also not eligible for those that are enrolling in an HSA. The three other types of flex plans are dependent care, transit, and parking. These are also use it or lose it basis. For dependent care, you can contribute up to $5,000 per year for daycare expenses. For transit, you can contribute up to $260 per month. And for parking, you can also contribute up to $260 per month. So a quick summary on these three spending accounts and how they're different. I know there's a lot of moving parts, so it's good to summarize these. The HSA, again, is being administered by Optum. It's employee money, so you have to elect these plans if you're enrolled in the Blue Care Elect Saver 4000 or the Basic Saver 2700. The elections are not locked in, so let's say you decide you want to defer $1,000 into this account during open enrollment. In February, you can decide to contribute more, obviously up to the maximum, or you can choose less. The debit card will be included to pay for expenses. And in terms of eligible expenses, it's all eligible HSA expenses. So you can review IRS Publication 502, or within the benefit guides, there'll be a link where you can pull down a full list of qualified expenses. These funds roll over. So again, these are yours immediately as soon as the money is in the account, and they won't be forfeited. The next account is the HRA, administered by HRC Total Solutions. This is employer paid, so you're getting this automatically if you enroll in the Blue Cross PPO 1500. There's no election, obviously. There will be a debit card, and it helps pay for the first half of the medical plan expenses. Funds in this account do not roll over, so if you're not using the HRA, it's going to reset the following plan year. The Healthcare Flexible Spending Account is administered by WageWorks. It's employee money. Any full-time employee who does not have a health savings account can enroll in this. Your elections for this plan are locked. So during open enrollment, if you pick $1,000 and you want to change it midway through the year, you can't do that unless you have a qualifying life event such as a marriage or birth of a child. Debit card is included for this, and then any flex spending eligible expenses will you be able to use the account for, including the second half of the deductible. Funds for this account, again, don't roll over at the end of the plan year. Moving on to dental. This will also, as we mentioned, be through Blue Cross. There are two plan options, the low plan and the high plan. The deductible for both is the same. It's $50 for an individual, $150 for a family. The calendar year maximum for the low plan is $1,000, and for the high plan, it's $1,500. There's a rollover maximum provision, which we'll talk about on the following page. Your preventive care, so your annual exams, are covered at 100%. You don't owe anything. Basic care, you will pay 20%. So that's things like fillings, the most common. Major care, you'll owe 50% of the charges. Things like crowns, bridges, the most common major care expenses within the dental world. And then orthodontia will also be covered at a 50% level up until the lifetime maximum, which for the low plan is $1,000. The high plan is $1,500. The network to review is Dentamax. So this is the National Blue Cross and Blue Shield network. Both networks, if you're in Massachusetts, can be found at bluecrossma.com. You can use that to check if your dentists are currently in network, or if you're looking for a new dentist and want to find a network provider, that'd be the place to go. So I mentioned the rollover feature. This is a cool way to increase your maximum benefit. So if you're enrolled in taking a dental plan for 2018, there's three things you'll need to do to have access to the dental rollover max. First, you need to have at least one service, so getting your annual cleanings would qualify. You'd have to remain a member of the plan throughout the plan year. And then you can't exceed the claim threshold, which we'll talk about below in an example. If you elect the high plan, which is the $1,500 maximum, your claim threshold would be $700. So if next year you just get a cleaning, you're obviously not going to run up claims more than $700. You would get an additional $500 maximum the following plan year. It's a great way to increase your benefit. iMed is going to be the vision carrier. In terms of benefits, the in-network benefits for a routine eye exam is a $10 copay. For frames, you have a $130 allowance. You have access to that every 2 years. And then the copays for lenses, $10 for single, bifocal, trifocal, and lenticular, and then a $75 copay for progressive. And if you get contacts instead of glasses, you have a $105 allowance, and that's every year. Out of network, you have a $50 reimbursement for an exam, a $74 reimbursement for frames, and then the listed reimbursements for the lenses, single vision, trifocal, lenticular standard are $42, $78, $130, $130, and $78. You also can get out of network contact lenses up to an $84 reimbursement. So much better benefits if you can find an iMed provider and utilize them. You do have the option to enroll in voluntary life insurance with Unum. Employees can enroll up to $150,000, and spouses can enroll up to $75,000. These are guarantee issued during this open enrollment period. Employee is going to elect in increments of $25,000, and spouses can elect within increments of $12,500, and then child life would be a flat $10,000. The voluntary long-term disability will be discontinued as of January 1, 2018. We are looking for new options to roll out, so be on the lookout for updates on that. You also have access to an EAP plan. This is a really valuable tool, so make sure you write down the number or grab an ID card. The biggest usage in the traditional EAP plan is for work-life assistance. So for things such as mental health issues, you can talk to a counselor for depression, for substance abuse, anything where you might need a little bit of assistance. You can also use the EAP plan for locating childcare, locating elder care services. If you're having any financial difficulty and need to talk with a counselor, you can do that with this Unum EAP plan. And this is an employer-paid plan. There's no cost to employees to utilize it, and it's completely confidential. Here's a chart with your weekly coverage rates. These are also in the employee guides that were distributed, but this version was broken down in terms of a weekly cost. From left to right with the medical plans, you'll see that they do increase. So I'm sure you noticed the HRA plan, or the preferred blue PPO 1500, had the least amount of employee cost sharing while utilizing the plan to go see doctors, etc. So obviously this one's a little bit more expensive than the other two. We've also listed the two dental plans that are available, along with the IMED rates. If you do have questions during the open enrollment period, you have resources to reach out to. So you can talk with Lori Wasta, Tracy Jones, Natalie Perez regarding anything employee benefits. Additionally, you're going to have access to a employee benefit helpline. And this isn't just during open enrollment. You'll also be able to, once you're enrolled and moving on through plan year 2018, the biggest service that folks use this for are claims assistance. So you have a couple different moving parts to your medical plans this year, and may need a second set of eyes to help you understand, or to work something that you think might not be working appropriately. So they can help with claims assistance, eligibility issues, help you find a doctor, etc. So you can call the 1-888 line here, or email them at rnc_benefithelpline@usi.com. So that concludes a presentation. I know we went pretty quickly, and I'd be happy to open up questions to the chat line. So a question that we have here is, how does the existing HSA account work with an HRA? So if you're currently enrolled in an HSA account and you have money in your account, you can continue to use that money in 2018. You just can't deposit money. So if you're enrolling in the new HRA plan, you'll no longer be able to defer money into the HSA, but you can still use it to pay for qualified expenses.
Hi, Michelle. So the weekly payments will start January 1st. So as of right now, as of this moment, the payment terms are still the same bi-weekly, but as of January 1, we will be going to a weekly pay cycle. Also on the retirement savings, it will be 50% up to $1,500 of employee contributions, and that will be an annual employer match contribution.
And there was a question around HSA fees if you leave the group plan, the Alliance group plan. Yes, the maintenance fee does go up. I want to say it's either $4.50 or $5 per month. I'd have to double check that to confirm, but it does go up. There's a discounted rates with Alliance group.
The 401k is not through ADP, so you will be receiving additional information on how the 401k plan will work. It's through Fidelity Investments, and that is something that is separate from the ADP open enrollment. So keep an eye out for future communications prior to January 1 to give you more information about that. We will be coming up with a way to make this presentation available. We are recording this session. However, it is a fairly large attachment when it's all said and done. So as soon as we figure out a good way to get this to you, we will make it available.
On the question regarding do you have to put money into the HSA or HRA? So you can enroll in one of the two HSA eligible health plans and not contribute HSA money. That's totally up to you. On the HRA, that's completely funded by the employer, so you don't have the opportunity to put money into the HRA. That automatically comes with the $1,500 deductible plan.
Hi, Linda. If you're having issues with the voluntary life enrollment, please reach out to Tracy Jones. She'll be able to help walk you through whatever issue you're having with the ADP portal.
In terms of the HRA plan, if you enroll in this and leave the organization, that plan, if you're electing COBRA, will remain accessible to you. But if you choose not to elect COBRA, that money, that access would go away.
Albert, yes, you have through December 11th to make any changes to your elections. When you are in the ADP portal, there should be an option for you to go through and make changes, and then you can save it for later if you are not done. So feel free to save it till later, and then on December 11th, make sure to go in and close that out and finalize your election.
And I saw a request to see the weekly costs again, so I brought that page back up, and we'll leave it up.
Yes, December 11th, FARGov is the last day to enroll. So please make sure to go in and make all of your elections before the end of the open enrollment period. After that, unless you have a qualifying life event such as a marriage, loss of insurance, or a birth of a child, you would not be able to make changes.
And in terms of speaking to the cost, particularly around the dental, we have a whole new population. We're merging two different plans, so there were some fluctuations in cost, and the dental was a little bit higher.
But we are offering two plans instead of one now, so that's a positive, you know, to give you more options on coverage.
And on the WageWorks dependent care, I don't think there's a limit on frequency for submitting for reimbursements.
So we will be, we have sent out a open enrollment guide that has links to provide you with additional information on the HRA, HSA, and FSA accounts. So if you want to take a look at that, and we can send it along again. Also, all of the open enrollment guides with the additional links for the summary of information is on the ADP portal now. So you should be able to log on to ADP and download all of the benefit guides and see the details, you know, as you need to. Please also make sure to keep an eye between now and the end of the year on your email. We will be communicating different timelines and different packets of information, including 401k and other benefit information throughout that time. And additionally, if you have questions, feel free to reach out to the people that were included in that question and answer page on here, as well as those people are also listed on the portal.
Yeah, in terms of looking to see if your doctors are covered under these plans, I would go to bluecrossma.com, and you'll be able to search the PPO networks to find in-network providers. You can search by name to locate them. Alternatively, you could call if you have specific docs and you're easier talking with them. you can call their office and ask if they participate with the National Blue Card program. Preventive care is covered at 100% under all plans. So if you're going in for annual exams that are routine, those are covered at 100%. And on the defaulting question, so the only way you're going to get defaulted to a plan if you're not actively enrolling is if you currently enroll in one of the PSG plans. You'll be automatically placed in the Blue Care Elect Saver 4000.
And that's only if you do not log into ADP and elect or waive your benefits. So it is a mandatory enrollment period, so everyone is required to go in and either elect or waive their benefit elections. Otherwise, you'll be placed into a plan if you're already in one.
Flu shots are considered preventive and are covered at 100%.
All right. I think there's one more question about the mail order prescriptions, and then I think we can conclude.
Okay. Yeah, the best way to go about mail order with Blue Cross is to log in through their member portal, bluecrossma.com, and they'll coordinate setting up any mail order prescriptions you need. And just as an FYI for ID cards, since we're talking about that, if for some reason we're doing our best, Heather's team's doing their best to get ID cards in everybody's hands prior to the start of the plan year. If you have something scheduled in early January and you don't see your ID card by 1/1, you can contact either your HR representative or you can contact Blue Cross to determine what your member ID is, and that should be all you need at your doctor's office. You can give them a call in advance.
Keisha, the first check in January will not have benefit deductions, but the second paycheck in January will show your deductions. So definitely make sure and check that check stub to verify everything is accurate. All right, well, I think that is all of the questions answered. Thank you, Rob, for being with us today, and thank you, everyone, for joining in. Please watch out for future communications and let us know if you have questions.
Thanks, Heather. Thanks, everyone.
Thanks. Have a great day.